Alrighty, Eric, I will turn things over to you to get things started.
Thank you so much, Laura, and welcome everyone. Great to see a good crowd forming here this afternoon. I'm Eric Engineer. I'm a partner at S3 Ventures. We're a venture capital firm based in Austin. We're one of the largest firms here focused on the Texas market. We've been here about 16 years and have partnered with over 50 high growth technology startups. And as of late, we've noticed that taxes are getting increasingly complex earlier and earlier in the life of companies. So we thought we would partner with our friends at Armanino to assemble a great panel to help all of you understand the tax implications of your company's growth, which is the topic for today. So again, thank you for joining. Happy to have all of you and happy to have this great panel who I'll be introducing shortly. Before I get started, though, I did want to make sure that we covered a few kind of housekeeping items. You are joined this webinar in listen-only mode. You'll see through the Zoom panel that there's a Q&A button. So we are saving the last 10 minutes of this webinar, if we're disciplined about it, for Q&A. So hopefully we'll be able to address some of your questions at the end. So please use the Q&A functionality in Zoom to submit your questions. We will also be doing some polling throughout. So you'll see some poll questions pop up. Laura will be handling that, and you'll hear her give instructions to that effect. So please participate in those. That really helps us get some feedback from you in the audience. And finally, a common question is, will there be a recording of this? Absolutely. You probably heard that announcement at the top here that this session is being recorded, and we will be sending a link to the recording later this week. So for all who register. So thanks again. We're gonna kind of pull up here the agenda. Like I said, our goal today is really to help entrepreneurs and their finance teams get a high level understanding of the various taxes that you may have to plan for as your company grows. Like I said, we work with a lot of startups, and some of these topics, whether it's state sales tax, international taxes, equity compensation, and now crypto, are popping up earlier and earlier in the life cycle of a company and adding a little bit of complexity sooner than folks might expect. So the hope here is that we just kind of help you, whether you're a founder or a CFO or a controller, just start to get a sense of what to expect as your company grows and just be on the lookout for it and just understand some of these terms and know what questions to ask. And to do that, we've assembled this great panel that you see on the slide here. And it's really a mix of finance leaders and tax experts. So we have Rose, who is the founder and CEO of Sudozi, Patti, who's CFO at Liquibase, and then John, Malcolm, and David, who are partners at Armanino and are experts in a lot of the topics that you see here on this agenda here. So before we dig in any further, and before we get into the introductions, what I wanted to do is do our first poll and make sure we all understand how that works. And the first one is, I will let Laura kind of read the question and put it in front of all of you.
Yeah, so our first polling question, which best describes your role? So are you a startup CEO founder, a startup CFO or finance leader, a service provider, an investor, or other? So if your role is not listed here. So again, we're just looking for which best describes your role, just trying to get a feel of who we have here today. So we will close this poll in 5, 4, 3, 2, 1. All righty, let's see what we have. All right. Eric, it looks like we've got some CFOs, some startup CEOs, little all across the board.
Yeah, all across the board, and yeah, love to see those first two categories for sure, and a great crowd here too. Well, thank you for sharing that with us, everyone. That definitely helps us as we kind of manage our conversation today. And then to introduce the panel, the way I'm going to run this is I'd like Rose and Patti to give their backgrounds a little bit so you understand kind of their experience as finance leaders. And then as we get to the topics of state sales tax, international taxes, and other tax considerations, I'll have John, Malcolm, and David do their introductions in those sections. So Rose, would you like to start off by just giving us a little bit of background on yourself?
Sounds great. Thanks, Eric, and really excited to be here with everyone. I'm Rose Punkunus. I'm founder and CEO of Sudozi. We're currently building software for finance teams, early stage finance teams. Formerly, more interesting for this session, I was the CFO at Scale Factor here in Austin, Texas. Before that, I was the CFO of the Fundbox. It's a currently Series D company. We had entities internationally, and so a lot of experience with some transfer pricing and having employees and sales internationally. And then prior to that, I was the US and Canada CFO for Uber. So I joined Uber in 2013 and really saw the growth, partnered with all different launchers and business leaders in pricing, and saw, unfortunately, a lot of the tax consequences when you're not prepared and you're not aware of webinars like these going through those stages. So hopefully I can share some insights there. All right, back to you,
What a
Eric.
great background. Thank you for joining us. And Patti?
Yeah, I'm Patti Soch. I'm the CFO of Liquibase. First, I want to thank S3 and Armanino for having me here today with such a great panel. Liquibase products automate changes that are made to the database as part of a software release process, and we allow development teams to move faster and more safely. Two important verticals for us are financial services, including the largest banks in the US, as well as healthcare providers and insurers. This topic is really relevant for me because we have customers all over the world. We're also committed to hiring the best talent wherever it is in the world, and we're exposed to potential tax issues as we continue to grow. My background's primarily software, and I've been a financial leader in a couple exits. So those experiences keep me focused not only on the implications for my company directly, but any potential exposure to a potential acquirer and what the impact might have on that exit. I really look forward to talking about this subject today with you guys.
Thank you, Patti. And Patti is been CFO at multiple S3 Ventures portfolio companies. And so we're very happy to have always partnered with her, and it's great wealth of information. You know, as you can see from the slide, we have a packed agenda. So I'm going to try to keep us on schedule. But the way we're going to do this, like I said, is we're going to go through these different sections and then have each of the folks from Armanino speak to their area of specialization. And so the first topic is, again, state sales taxes. And, you know, thanks to the Supreme Court and to COVID, state sales taxes are becoming increasingly complex for software companies. And that's something that our friend Malcolm here on the call is going to help us understand a little better. But before we do that, again, another poll, just to get a sense of how impactful this might be to those of you who are listening. And so, Laura, do you want to kick this one off? And I'll just read it. It says, across how many states do your customers and or employees reside? And so you have a few options here. And really, this is to help us understand kind of the level of complexity you might be facing based on your customer base or your employee base. Laura, you want to do your countdown?
Yep, getting some good feedback. We'll close this poll in 5, 4, 3, 2, 1.
All right, quite interesting. Okay, so it looks like you know, a good quarter are getting close to national, but then there's you know, almost half that are just starting to get started in terms of expanding into more states. So that's really interesting. That's what we find as, you know, startups grow, they kind of slowly edge into more and more of this complexity. So that's interesting to see for sure. So again, I wanted to welcome Malcolm to the floor here. So Malcolm, would you give a little bit of background on yourself and Armanino, and then we'll dig into some of these topics here on the screen.
Yeah, thanks, Eric. Sales tax, very exciting stuff.
Yeah.
I've been doing it, let's just say, more than 30 years. Been a partner at Armanino for 15 years, and I did Big Four for 15 plus prior to that. East Coast, West Coast, various geographies. 3/4 of my clients are SaaS or other cloud services, and then the rest are e-commerce and then various other industries. Do a lot of due diligence, buy side and sell side, and sales tax always seems to come up at the last minute, you know, the weekend before the deal closes. And It's always an issue with my software clients. The people on the call today have the benefit of, since most of the folks on the call today are early stage, have the benefit of getting a heads up on this. And we try to give our clients a heads up. I get involved with a lot of software companies on sales tax when they're 30, 40, 50 million in revenue. Even, I mean, one client went public, filed their S1, and they were 100 million in revenue, and they were only collecting sales tax in one state. So it was a multi-million-dollar accrual on their balance sheet. A big deal, you know, when you're filing an S1 and find out you have $5 million of exposure. So the conversation I have with the early stage companies goes like this usually. There are two issues that you have to have a liability for sales tax. Number one is taxability. Does a particular state tax your offering? Software as a service, for example, is taxable in 20 states, plus Chicago and a few cities in Colorado. The second issue, though, even more importantly, and back to the slide relevance, is nexus. Do you have a sufficient contact with that state, assuming they tax SaaS, in order for them to impose a tax collection duty on you? And if you don't collect tax, to hold you liable for that, regardless of what your MSA says with your customer. If you have a tax indemnification clause, that's great. You're probably not going to sue your customer for it, but the state can come to you regardless of your contract language. So if you are in states, there are two ways you can have that nexus. One is a physical presence. That's the old nexus, the old standard, which still goes. And I saw the employee headcount. Almost half of the audience had employees in more than 10 states. That's a lot. And I guess post-COVID, that makes sense. So having an employee in a state establishes a physical touch. I have software clients that have very large deals, six-figure deals, and large enterprise customers. Pre-COVID, you had to go meet with them, show proof of concept, close that deal live, right? Not so much after COVID, but if you travel to meet with a customer, that's a nexus trigger. And then after the Wayfair case in 2018, the big Supreme Court case, you don't even have to have that physical touch. If you exceed the economic threshold of that particular state's threshold, which is usually $100,000 of sales or 200 invoices, then you're deemed to have nexus, economic nexus. So a lot of our clients get caught by surprise. They don't realize, well, we don't have any employees in that state. We don't have to worry about it. And besides, it's software as a service, and services aren't taxable. Well, neither of those things are really valid, right? Software as a service is taxable in many states, either as software or as data processing, or because the state taxes all gross receipts. So it catches a lot of my software clients off guard. And then when we end up doing a nexus evaluation for them and a taxability review and a prior period liability calc, it's a bad surprise. And then you have to go to the states and try to remediate that and do voluntary disclosures. And you've got money that's being escrowed for the deal. And, you know, it's a bad surprise. So it's something to avoid. And with our own clients at Armanino, we try to counsel them early, you know, while they're still pre 1 million revenue. And I know a lot of these companies are dealing with, you know, once they hit a certain level, 5 million in revenue, they're usually graduating from QuickBooks to Sage or NetSuite or whatever, getting their revenue recognition together and doing lots of other things. But sales tax, which seems like a nuisance, and it is, but it's even more of a nuisance if you're not collecting that tax and you're ultimately held liable for it, either if a state catches you or when you have an exit and go to sell the company, it effectively is 8% on average off your margins that you could have been collecting which some people don't want to do because they think it's a compliance burden, but you can outsource all that. There's no reason really, other than oversight, not to pass that tax on to your customers.
That's thank you, Malcolm. And yeah, I can speak firsthand. We've seen actually in multiple exits over the last couple of years where at the very end, right, the state tax issue does come up. It doesn't kill deals, but it slows it down at the end for sure. And so anyone who's going into due diligence and thinking about exits, especially, this is something to definitely kind of be aware of, hopefully before then, as you said, Malcolm. Maybe I'll kind of switch over to Patti. You've kind of been through companies at a variety of stages that have kind of gone through those gates, like Malcolm said, 1 million, 5 million, and maturity, the different systems that you have in place. Can you talk a little bit about, just at a high level, how you think about tax and how you've approached this?
Yes. I mean, I think Malcolm's point about getting caught off guard is really important to the way that I look at things. I try to always weigh the risk against the cost of compliance, especially in the early days. But part of that is really understanding, right? Because if you don't have the knowledge, how can you weigh the risk? And so part of the way I approach it is just trying to understand what the potential exposure is, and get educated by people like these experts we have on the call, and also colleagues as well who've gone through it. And weigh potential exposure in those early days, because you want to put your resources toward things that are really building the company. But that's my general philosophy on it. And also, if you can offload a potential exposure in a contract, as an example, or using a partner, being creative is also important in the early days, to make sure that your limited resources. So you want to make sure you get the information, but also comply. You need to make sure you're complying in areas where you have a lot of exposure.
Rose, clearly you were part of some hyper growth stories and really kind of extreme situations. Any stories from that or lessons learned?
Yeah, I mean, I echo what Patti said about being aware and knowing how to even make those trade-offs. Do you want to spend engineering effort integrating something or building out some custom system to actually collect that amount? I'd 100% agree with Malcolm. If it's much easier to actually just, if the customer's made a decision to buy something, they're going to buy it in that 5 to 10% tax range is not going to change their ultimate buying decision. And so trying to capture that at the place you're getting the revenue or your point of sale, and just being aware of those things before you get larger or too far downstream where you owe this amount and you haven't had any system in place or any way to even capture this cash from your customers. So one anecdote, I'll go back to Uber, is just because the pricing was like per mile and all of these complicated things. We actually had to have our in-house engineers build some custom software to be able to implement this correctly. And there was a certain period of time where we were out because we didn't have that software in place to actually charge the right amount.
Great. We do have about 1 or 2 minutes left on this section, and I actually got a great question come in from Larissa. What do you do if you have not collected sales tax from your customers in the past and you need to now? Or like, well, what's your course of action? Maybe Malcolm, you can speak to that.
And I will attempt to be succinct, but the driver of that answer is how much money is it? If it's $2,000, I think if your prior period liability is 2,000 and you're scaling in that state, so it's going to get larger and larger, register, start collecting and filing, put that $2,000 on your first tax return. If you find out you owe Texas $60,000, you might not want to just dump that on your first tax return, because it's very possible they'll ask you about prior periods and then they'll hit you with interest and penalty. And if you do a voluntary disclosure, a VDA, you could limit your look back period to 3 or 4 years, which is a big deal if you've been around a long time, and get a penalty waiver. And actually, Texas waives interest too. So look before you act. No surprises. Evaluate what the dollars are, cost benefit from there.
Thank you, Malcolm. That's great. So we are now at the end of this section, sales tax, and we're going to move on to international taxes. So, you know, this is something that I was kind of caught by surprise over the last couple of years, where how early in the life cycle companies are doing things internationally. That could be employees, customers, contractors, especially with COVID, but even just the general kind of need for labor, especially technical specialties across the globe. You're seeing folks and teams just expand in ways much earlier in their life cycle. And so that again introduces a lot of other tax complexity. And so as we did before, we're going to jump to a poll. In which regions do your employees or individual contractors reside? And you can see a few countries and regions there. And Laura, just let us know when the countdown begins.
Got all the USA, Canada, Latin America, Europe, Asia Pacific, and Africa, Middle East noted here. So again, we're just looking for in which regions do your employees or individual contractors reside? Looking for a little bit more feedback. We'll leave this, we'll close this in 5, 4, 3, 2, 1. There's an interesting point being shared in the chat. You might have multiples. Yeah, it looks like some people had more than one. So unfortunately, the survey did not accommodate for that.
Okay,
but,
we did not set it up appropriately.
So
Sorry.
apologies for that. That was definitely an oversight. But yeah, so it looks like a lot of people have multiple.
All right. Well, yeah, sorry about that all. Well, yeah, it looks like even some folks picked with the single, that definitely international. I suspect there are a lot more. We're seeing that in the chat. Sorry for that confusion all, but that does not mean that we're not going to move forward here. It definitely is some interesting things to talk about. And so I am excited now to have John join us, John Davies, to talk about, you know, how customers, contractors, and employees in the international arena can impact taxes. So John, maybe a little bit background on yourself first, and then we can dig into these topics.
You bet. Thanks, Eric. Yeah, to kind of echo what you said, we are seeing it more and more that companies start up and literally the next day have multiple employees in multiple jurisdictions, both on the investor side as well as the employees and whatnot. But John Davies, I head up the international tax group for Armanino. We have about 30, 40 people that work specifically on cross-border transactions, liaising with our network of offices around the world, as well as addressing the US tax considerations of international transactions, which are very wide and varied, no doubt about it. I've been with Armanino about 16 years, and prior to that, I was international tax partner at Deloitte. So yeah, like Malcolm, close to 30 years of doing this. I have a heavy focus in technology and of all sorts, as well as biotech and pharma, from SaaS companies to hardware to software prior to SaaS, and everything in between. So what I thought would be very helpful is just talk a little bit about 3 key areas of international tax, especially when it comes to expansion of companies into new territories, again, whether it be on the sales side or the employee development side. And first, I'm actually going to take these in reverse order just to throw things up a little bit and talk a little bit about employees first. Because what we typically see in the lifestyle of a company is that companies get started, they tend to look for employees and contractors wherever the best the best experience and quals are. And so one thing that we see very often is immediately companies looking outside the U.S., whether it be from a founder that's from a different country or friends, relatives, experienced peers in different jurisdictions. And so we have a hierarchy that we use in advising companies on how to expand. And the hallmark or the kind of the key directive is the least amount of footprint that you can put in another country is going to be administratively and economically more efficient than setting up subsidiaries everywhere right off the bat. And so what we see very often is the use of PEO or EOR, professional employment organization or employer of record structures. So you have an individual that, and we'll talk about contractors as well, but you have an individual that's kind of gone past the contractor stage. You want to have them as an employee. They're located in Azerbaijan, and you just got to have them. And so you don't want to set up an entity there, let alone figure out where it is on the map. And so you can use a professional employment organization to employ the personnel in that jurisdiction, which addresses one of the most critical components of multi-country, multi-jurisdictional employees, which is around payroll taxes. We'll talk a little bit about income tax, but the most critical component is payroll taxes. That country wants to know that those taxes are getting paid, both the employee portion and the employer portion for that jurisdiction. PEO or EOR takes care of that piece of it by effectively employing them as an employee of that organization in that country and taking care of and paying all those related taxes. Now, of course, there's a cost to doing this, an uplift. There's everything from white glove services that take care of everything at a very high level to lower touch, more economic online type services. But the end result is generally the same in that you have the employment portion of these of engaging with these personnel taken care of. And it adds as a kind of an insulatory mechanism between the company and operations in that jurisdiction. Up from there is what we call direct employees. So let's say that you have employees in Germany, Hungary, Austria, and France. By purpose, they're all in the EU, and you decide, hey, we have 20 people or 10 people that are engaged in these jurisdictions. Let's set up an entity in one of those countries, and then that entity will employ these people within the EU directly as an employer. It's definitely more efficient from a cost perspective over a PEO or EOR structure, and has relatively light administration for just having one entity, but engages with those personnel in various countries. Up from that position is a representative office, which can also be set up in a number of jurisdictions, which is essentially a non-taxing or a non-taxable branch. And so the U.S. company, or again, one of these other subsidiaries, will engage as the employer of record in that jurisdiction, take care of the payroll taxes, and ostensibly be a registered representative office, but not a taxable entity. And then finally, we have the branch or subsidiary route, which is the formal process of registering an entity in a particular jurisdiction. We typically have a threshold for when things become more than preparatory and ancillary, and this kind of bakes in, or auxiliary, which bakes in some of the income tax considerations in a country of somewhere between 5 and 10 people in a country. So once you have 5 or 10 people, you really need to be consulting with your advisors and understanding exactly what the activities are that are being done in that country, and does it create what we call a taxable presence or permanent establishment or nexus from an income tax perspective for that country. This is also based on the wide net or web of tax treaties that the U.S. and other countries have to address some of these issues. But again, typically in somewhere in that 5 to 10 range, we're saying you probably ought to set up an entity or a branch and formally register your presence there. This dovetails very closely with contractors as well. One of the things that we find most often is two pieces. One is that we find that a lot of contractors should really be employees. And again, generally we use a threshold of if someone's spending more than 50% of their time as a contractor for the company, we want to evaluate whether or not they should be considered an employee. Much like California in the States, some countries have very low thresholds for what constitutes an employee versus an independent contractor. And so some things we use sometimes is just a confirmation of independent contractors that they have other clients, other engagements if they're, you know, above that 50% kind of general rule threshold. We typically recommend, and that's why I kind of started out for the PEOs first, is we generally recommend to engage with independent contractors through a PEO because of the fact that so often if a independent contractor is paid directly, there's a low likelihood that they're actually going to pay their taxes. And that can come back on the company if there's ever a disagreement or issue. We've had a number of horror stories, even with public companies, of engaging with independent contractors, and especially in jurisdictions with a lot of governmental oversight. India, China, Israel come to mind, where we've had some horror stories of contractors making problems for the company because they were disgruntled and probably should have been considered employees. So that's kind of the first threshold. And you address quite a bit of that through using a PEO. The other is around compliance. And so as part of the AP process, it's essential that when services are provided from any company or individual outside the US, that a W-8 BEN is gathered for that vendor. And it's equivalent to a W-9 in the US, but it essentially is an attestation by the service provider that they are providing those services outside of the United States. And therefore, backup withholding is not required. That's probably the number one thing that we see in coming in with new clients, is a lack of compliance around that. The penalties can be quite substantial. It's also a big, to Malcolm mentioned earlier around due diligence and sales tax. It's also one of the areas of key from a due diligence standpoint. And finally, on the customer side, there's a huge explosion of jurisdictions looking to pull in more tax dollars. And probably the biggest area, kind of the international equivalent of sales tax, is value added tax. VAT, GST, PST, HST, it goes by a lot of names, usually has an ST or an AT in it, that really apply almost always when in a B2C environment, when companies are selling directly to individual consumers. There's 48 countries plus the EU, so roughly 80 countries around the world require a non-resident company to register for GST or VAT there locally, collect and remit it, even though they have absolutely no presence. Just by the mere fact that they're selling to individuals in that country requires this registration. And we've done a host of analyses for different companies on addressing this issue, being in compliance. Again, huge due diligence consideration / investor due diligence requirement around VAT and GST. And there's also a number of jurisdictions that require B2B VAT to be collected. A great example is in Canada, Manitoba and British Columbia, I think, are the two provinces. Probably more moose there than people, but they do have a B2B GST registration, collection, and remittance requirement. So as really what we're saying, what the key takeaway here is that as you enter into new countries, it's important to consult with your advisors and understand exactly what the local implications are. There's many ways to address it. Withholding tax is another perfect example that we see a lot with SaaS and software companies, where the withholding tax is the responsibility and is the onus of the customer to withhold. They're on the hook for it. And so they're typically very conservative. We spend a lot of our time consulting with customers of clients in terms of what and how a particular transaction should be characterized as, in order to avoid or address the withholding considerations. There's a lot of ways to kind of address this up front through gross up provisions in service contracts, wording around how the master services contract is laid out. A lot of things to begin up front to kind of head this off and address it before things go too far down the line.
Thanks, John. Wow, a lot more complexity than I definitely realized going into today's call, for sure. So thank you for that. I thought I'd call on Rose. I mean, clearly Uber was international, and you may have done some other stuff too, Rose. Any things that you've learned from your past experience in this realm?
Yeah, this is I actually learned a lot from John just now too. So thanks for that. I think Uber clearly had a lot of different entities. Some of the jurisdictions we entered even without registering anything, which there's a lot of stories there. But I actually want to talk about my experience at Fundbox, where there were a couple of different international entities and setting up both the employment relationships there, both contractor and employment relationships per John's guidance on thinking through just rule of thumb, what are the risks, being aware of when you want to really be more official and register, when you want to partner with an EOR or somewhere, and also how you're setting up your own entities, right? Transferring IP between different countries of entities within your company's umbrella. And so thinking through those types of tax consequences as well. And so I go back to just being aware of what those risks are. And then as a startup or as a company founder, CEO, really, you only have 24 hours in a day, right? So get experts, talk to experts so you don't have to do all the research yourself and then be able to make those decisions.
Great, thanks.
Yeah, and I'd echo that. Yeah, definitely. Again, kind of most and probably importantly is, again, as you enter new territories, really having a discussion with someone knowledgeable in that area is critical to ensuring that you're going to be in alignment with the rules in that particular jurisdiction, as well as not causing an issue with your customer. A great example is Brazil. If you sell SaaS services into Brazil, and you're expecting to get $1 for every dollar you charge, you're going to be sorely disappointed when you only get 48 cents, or sorry, 52 cents, 48 cents worth of taxes and other withholding tax that apply, and suddenly you've cut your revenue in half. Yeah, Eric, there are a couple of questions from the group. If we want to just
I just in the for time, John, I may
okay. Let's move on. If we have time, we'll catch them at the end.
They're great questions. They're a little particular, but I did want to get Patti's view because obviously, like I mentioned, Patti's CFO at Liquibase, one of our portfolio companies. They, like everyone else, are in the war for talent, especially technical talent, and are definitely looking beyond our shores for that. And Patti has learned some things that she shared with the board recently that I just thought would be great for the broader group to hear.
Yeah. So we have a very successful open source project that's used around the world, and we are, John, one of those companies who has wanted to hire the best talent wherever it is in the world. And honestly, the biggest learning I've had this year is hiring those people. We do use a PEO. I think that's a great solution. But just on a side note that's not related to tax, just understanding the labor laws and the compensation structure and how people are paid around the world has been an eye-opener for me. We have somebody in the Ukraine that we hired recently and found that they're paid in US dollars, and I had to actually spend quite a bit of time making sure that this person wasn't just telling us that that's what the norm was in that country, but in fact that is the way it was. And that's true for several other countries. So understanding really what the norm is in that country before giving an offer, it's terrible to do it afterwards, is an important learning that I had. I will say that we use something called Fast Spring for customers, for credit card customers, because we do have a lot of those around the world, and they take care of foreign exchange and and taxes around the world for those particular customers. I'm not saying that that's the only one. There are lots of them out there, but that was an easy fix for us to handle that part of our market.
Well, that was interesting, and that kind of does touch on one of the questions that's here that maybe we can hit a little bit, which is like there are these technologies that kind of collect taxes and claim they file for you, and so like can you maybe, I don't know if others kind of help us understand, like how do we think about that? Like how do you know that they're doing everything or enough?
Yeah. And it's a great example. Amazon, for instance, and Shopify, both are popular platforms,
right?
But they vary greatly in terms of which lever you pull, what actually happens. So if you're sold by company, fulfilled by Amazon, that means that and let's say you do it in Canada, for instance. Just had this situation last week with a client. That means that you as the company are going to have inventory that you own in a Canadian Amazon warehouse. And you're responsible for import GST and all these considerations. Whereas if it's sold by Amazon, fulfilled by Amazon, that means Amazon's buying it from you and you're done, right? You don't have to worry about any of those importation issues. So there's a lot of those types, and Shopify, again, has many different options in terms of how, if tax collected or not, and kind of just navigating what it is you're actually signing up for can sometimes be a little more difficult. On the other end of the spectrum, you have things like iTunes and Google Play, for instance, where they take on the role as the seller and collect and remit VAT on your behalf, in essence. And so a lot of those issues are resolved from a transactional tax perspective. So the key thing is, again, as you go into these new customer channels, as well as new countries, it's essential to kind of understanding exactly what's at play, what the transaction flow is. Mm-hmm. One thing we do for many companies is put together an operations manual, which lays all the transaction flows out, as well as how it's recorded in the books, to do's and don'ts, who can do what in which country, to kind of stay on top of these issues, as well as understand the tax consequences and compliance requirements.
Great, thank you, John. One real quick one, it's not exactly on taxes, but I love the anecdote, Patti. Can you just talk about like the cultural things that you have to be aware of with international employees? I think you had talked about how certain countries, they're like what bonuses they might expect and how they might get paid.
Yeah, so Colombia, we had been working with a sales rep to hire a sales rep there, and we thought we understood that they get a Christmas bonus, which is true in a lot of Latin American countries. In addition to the salary, you have a mandatory Christmas bonus. It's 1 month's salary. And then we found out that they also get one during the summer, and then another half a month. And so all of a sudden the cost of that person changed dramatically, and it made the negotiation really tough. So it's another just example of really understanding the details. And although these PEOs are helpful, they don't always give you all the information. We actually go to multiple now to get information on a country so that we can triangulate and make sure we have all the information we need.
Yeah, things like car allowances, meal vouchers, in
yes,
different
meal
jurisdictions.
vouchers. Yes.
Yeah, the meal vouchers, people can get so upset, and it's literally like, $5 a day. But if you don't offer it, I had one again, Latvia or Estonia. Yeah, people getting offended and having major issues with employees. So again, yeah, kind of as Patti mentioned, I mean, it's so important to kind of understand best practices in that location to ensure that you're kind of in a
country specific is what it sounds like.
Yes, absolutely.
Yeah. Okay, very interesting. All right, we will move on. Thank you, John, for that very insightful overview, I guess, of all the things we have to consider. Now,
deluge, deluge of information. Yes.
The deluge, the deluge. Thank you. Scared everyone. I don't think anyone's going to go to international now, thanks. So now we're going to ask David to join us. We have a lot of other just kind of.
We have definitely a deluge here. This is going to be this is going to be quick and dirty of some hot topics instead of going into the depth that John just went into. Plus, I'm not exactly the expert on all of these, I'll admit, but I'll give you my background as well once we get through the polling question.
Just 1 second, we're going to jump into the poll, but yes, we have a lot to cover in our last 15 minutes. So equity compensation is pretty much standard in early stage technology businesses, especially if they're venture backed. And that obviously creates a lot of questions around taxes, both for individuals as well as for the companies, and a lot of questions for CFOs about individual taxes sometimes even. And so, we just wanted to get a sense of like who on the call is making use of equity today. Unfortunately, we did the single choice thing here again. So pick the one that you use the most and we'll see what the results are.
Great, we've got some good feedback. We'll just close this poll in 5, 4, 3, 2, 1.
All right, it looks like stock options are the clear winner here.
Everybody loves stock options, yes.
Yeah, that's not surprising at all.
Yeah.
So David, I will let you give your background. Obviously, you're a jack of all trades, so you can tell us a little bit about you, and then we can jump into some of these topics.
Yeah. So background, I actually run, or I'd say try to run and corral the Armanino tax practice, which has been ever growing. We actually just merged a firm in Erickstown. We actually opened an office and merged in Holtzman Partners, which is an exciting add for us in Austin, and kind of in our presence in Texas, but kind of expanding throughout the country, and definitely have clients, everywhere. My background, I was at Deloitte with both John and Malcolm for a long period of time. I was there for about 17 years before seeing the light and kind of thinking that there was a better way to serve clients, to be more personally involved as a partner, and really to be more involved in the day-to-day operations that a lot of our, especially smaller clients, but even larger clients needed to move. And the landscape's only gotten worse with everything going on these days in the market that we're dealing with today. All these things are fast and furious and can lead to opportunities, but definitely huge problems if you're not aware and don't have the right advisors to help you. So I've been here for 16 years, and it's a great firm, and I think we got a great practice, and I think you're seeing some of the depth of our practice here today. So hopefully you're seeing that. So maybe just to jump in, because I do have kind of a potpourri of topics, and maybe we can even save some time for some questions here. Equity compensation, and I definitely want to hear what Patti and Rose have to say about this, because I'm sure they've lived through this as well. But just, thinking through 409A valuations, we see all the time that when do you need them? How often do you need them? The real answer is probably every year, unless you go through some kind of substantial change, which is hard to always define. But if your business probably doubled, you might want to do a new 409A. If you did some major acquisition, you might want to do a new 409A, but just staying compliant with that. Obviously, 409As also have, the book accounting aspects to them, in addition to just whether you're issuing ISOs for fair value, which can also have a huge consequence to whether they are ISOs and the ramifications around that. So being aware of 409A and making sure you're doing that on a regular and consistent basis is important for a lot of different reasons. The whole ISO non-qual, generally, in a startup phase, you're going to want to give ISOs to anybody who you can, other than obviously directors and others that aren't, true employees of the company. You do have to weigh the limitation requirements and make sure that, how much you're giving does qualify as an ISO. There are limits to how much you can give in any one period of time around ISOs. So you do see a mix, especially for execs, of ISOs and non-quals these days. There's vesting and early exercises, which are very, very common these days and have definitely consequences to them. The next thing down there is 83B. If you early exercise and you don't do an 83B, well, then you got to know what the value of the fair market value of the stock was when you early exercise, and it has different ramifications depending on if it's an ISO or a non-qual. ISOs have the AMT consequence, and non-quals are just fully taxable as W-2 wages. So taking those into account, for rank and file people can be very, very complicated, and you really have to have, a good program to make sure these people understand what the tax consequences and make sure you're reporting it correctly from a payroll perspective as well. 83B elections, I'm sure we've all lived through some level of horror stories around people thinking they did them and not doing them or not doing them correctly. Probably the biggest lesson is that you have 30 days to file, and that's 30 days, not 30 business days. Doesn't matter if it's a Saturday, you have to do it within 30 days. You need to turn a copy to the company, and so they have it on file and record, and you need to file it with the IRS. So, seen a ton of people that thought they did 83B elections, companies that thought the individuals did 83B elections, and so therefore accounted for it that way from a payroll perspective, and it turned out that they didn't for various reasons. So, all this stuff is really, really important to have your hands around and to make sure that you really know what everybody's doing and you help them through it. Probably the biggest equity compensation thing that I think companies can do for their employees is some level of education. What does this mean for you? What are the consequences if you do something one way or the other? And so we get asked all the time, not just from a tax perspective, but a holistic perspective, to come to companies and tell their employees exactly what they're getting and what it means to them. And it can be very, very valuable and kind of take the burden off of the business and put it on somebody who's an expert in the area. Patti, I don't know if you want to comment on any of these or Rose.
I'll jump in.
Go for it.
So earlier I talked about weighing risks and compliance. This is all compliant. It's very risky not to do any of these. So don't weigh it, just do it. I think, 409A every year, you just have to, every 12 months. And I think 83B elections for sure are something that people are really confused about. So, make sure that you understand it, make sure that if someone does need to file an 83B election, that they do that. Equity is really important to the company, and putting the plan at risk is, you just never want to do that. You never want to go there. And so in addition to having a great tax advisor, also make sure you have a great corporate attorney, because these are the kinds of things, if I ever have a question, even a slight doubt, I go to our attorney and say, should we do another 409A? This transaction just occurred. Can I issue stock options right now? Depend on the experts to make those decisions.
Yeah, 100%. Two other anecdotes I'll add are a couple of my peers have asked if former employees want to know the 409A of the company. Do you share it? Do you not? So I think in that specific forum, the consensus was you can go ahead and share it. It wasn't a bad actor. The former employees really just trying to make a decision. And then marrying this topic with the prior one, not every country has this concept of 409A, right? And so thinking about the consequences for your employees or contractors or whoever has options in those other countries, when you have this 409A and you set a price on, through the 409A, like that may have other tax implications personally for other countries that don't have this concept of 409A.
Yeah, John could elaborate for days on, global equity structuring and planning, in addition to just dealing with the US. So, the next topic here, so I know we're running a little behind here, is qualified small business stock. And qualified small business stock for owners and even employees of companies that are getting stock can be a very, very valuable thing. It can basically exclude up to $10 million or 10 times the invested dollars, whichever is greater, from federal income taxes. So obviously can be a really, really significant benefit. We're also seeing a lot of what it says here, conversions from LLC to corporations, before there's an event, to try to be able to qualify for qualified small business stock. There is a 5-year holding period. There are a lot of really complicated parameters to whether or not you qualify and how long a company qualifies. So this is definitely something that has huge value to your owners, your employees, your investors, and it's something not to take lightly. And it's another area that I would definitely recommend getting an outsider to kind of review what you should be representing and how you should be representing that to these people, to make sure that as you're getting different rounds, as you're doing different grants, that you can really tell them, what the answer is and how you qualify it. There's also a lot of gifting. You see people doing gifting and getting benefits out of qualified small business stock. Hopefully this will stay around. This was one of the provisions that was kind of on a little bit of the chopping blocks with the Build Back Better Act. And so it's such a big benefit to startups and to funding the startups that we hope that doesn't come back. But for now, it's still the law. You have to be a C corporation, but huge benefits if you can qualify for it.
Thank you, David. And I will reiterate on the conversion to LLC. We have some sad stories in our portfolio, folks who didn't convert until we invested, because we require a C corp, and they lost several years in that clock towards the 5-year, right? So it is a regretful thing for some folks.
Yep.
All right, let's talk about these other two.
Yeah, really, really quick here. One thing that we're seeing pretty much every day, my comp and benefits guy is pretty much dealing with secondary sales almost every day these days. There's so much money out there There's people that want to do larger investments. There's employees that, have been around a company for a very, very long period of time and want some liquidity. And so you're seeing these just pop up all the time. There's a ton of implications to these if you don't do them right and you don't get advice up front. Definitely financial statement charges can be an implication. There's tax implications around disguised bonuses, whether depending on how you did the transaction, is it really a compensation payment to the employee versus a purchase of their shares? That can obviously have ordinary income versus capital gains ramifications for the person. So just huge issues that we're seeing, and a lot of contingent liabilities from non-reporting and withholding. And if you're dealing with the big four, most of them have never seen a secondary sale that doesn't involve some sort of a compensatory component to it. So definitely, this is something that I'm sure a lot of people that, as they get further along in their life cycle as a company, will see these days with all the factors that are going on. But it's definitely something to be aware of and make sure you understand both the financial statement and tax consequences to it. The last thing I just wanted to throw out here is one of the things that just has been on fire and we're seeing a lot of, and we've invested actually quite a bit into both the tax as well as a lot of the other aspects around digital assets and cryptocurrencies. I mean, you can't even watch a sporting event without 4 commercials these days around crypto investing. This is an area that's not for the faint of heart. And we're seeing businesses get involved in it, not just blockchain and digital asset companies, but just regular treasury type functions. The IRS is way behind on here. They're very inconsistent at what they've been doing. Some of the latest rulings that even came out last week are very, very inconsistent with certain types of investments that you can make. So just be aware if your business or you're individually dealing in digital assets, make sure that you understand the ramifications and the rules. And I know that we're planning to send out some materials after this that might be useful to some of the companies. So that definitely will be one that we can provide just to have people's awareness, because it is kind of the new thing. So just wanted to mention that as well.
Wonderful, thank you. Well, I think we maybe have a couple minutes and maybe a little bit more if we are willing to go a few minutes over here for the open Q&A section. I know we did cover some of these questions that have come in during the course of the conversation. So I'll have the panelists, if there's something you see here that gets your attention that you'd like to address, feel free to chime in. There was one question around needing to file a 1042-S. I guess it has to do with the international.
Yeah, so a 1042-S is required. I can address that one in the W8BEN question that are, yep. I think, good general applicability. A 1042-S is required whenever there's a remittance to a foreign service provider, essentially. And it's required if again, it's depend on the situation, but that's when it is potentially applicable. So there's unfortunately it's very facts and circumstances specific, but that's typically when we look to evaluate the treaty for the country and whatnot. So I'll say anytime that there's a payment made for foreign services to a foreign party, or for royalties, interest, dividends, anything like that that gets paid to a foreign recipient, it should be part of the AP process to evaluate the withholding considerations, of which a 1042 and 1042-S are the necessary IRS forms. The W8BEN is also a close cousin in that it is not something that's, the 1042 is filed with the IRS, where a W8BEN is required of any foreign vendor that is, again, services, royalties, anything like that. That is completed by the customer and held by the company and is required to be produced upon audit by the IRS, but it basically is an assertion around where services are provided or what type of income is being paid, and therefore forms the basis for the withholding considerations that a 1042 involves.
Got it. Thank you, John. This one's maybe for David. How early in a company's life do you start doing the 409As?
Right when you grant options, every grant, you have to do it from the very beginning. This is not something that like sales tax that you can wait. I think as Patti was saying, you can't wait and figure this one out on the back end. You're going to have huge issues with fair value. There's also a question here of the difference between an stock option and RSU. I'm surprised how early I see companies going the RSU route as opposed to the option route. But a stock option is exactly that. It's an option to purchase a share of stock at a future time once you vest and have the right to buy that stock. So you basically get usually current fair value pricing and you get to buy it later. So obviously if the value of the stock goes up or your 409A goes up or you go public, you get to buy it for less. And then whether it's a non-qual or an ISO kind of warrants whether that's taxable at that time and holding periods and all those other kinds of issues. An RSU is basically property, current stock that you get today that's restricted, that you can buy, that you vest over a period of time. So you basically get the right to that property as you vest in the shares. And again, it can have all kinds of different consequences, the way that early exercise provisions and acceleration provisions that can have huge ramifications. So hopefully that makes some sense and answers that question.
Yeah, thank you, David. And this is something I've seen and I'm curious about. I've seen RSUs used for international for some reason versus, and so maybe John, I don't know, is there a logic behind that? Why some companies do that?
In terms of issuing options?
Yeah, versus options. Is there a benefit or is there just a point of view on that?
Yeah, well, from an international perspective, you can't issue qualified options. I think it's mechanically not possible. So it's typically non-quals.
Right.
But we do see very typically that, and you also have to deal with the foreign country issues around stock options and stock compensation. So generally we see stock options not at the forefront with international employees. It's usually something that comes later or after, more substantial growth because of some of the complexities just in terms of administration.
Got it. Well, thank you all. I know we were a couple of minutes over. Just what a wealth of information. Like I said, I learned a lot. I think we all did from this, even though we have years of experience here. It's just constantly changing and dynamic space. So thank you all. As was mentioned earlier, this has been recorded. And if you registered, whether you attended or not, you'll get a recording. And we will also be sending some additional, I think, pointers to more information on some of these topics that Armanino has available to them for all those who registered. So thank you again.
Feel free to reach out, with any questions.
Yeah,
I know
and
there's a lot of
a big
questions we didn't get to.
Texas welcome to the Armanino team here in Austin. As David mentioned, happy to have you here in Austin, and hope to have you involved in the ecosystem more. Thank you.
Thanks a lot, guys. Appreciate it.
Thanks, guys.